Welcome back to Focus on the Future. Chances are the first major purchase you'll make in your lifetime is a vehicle. Some of you will choose a used model while some of you will purchase a new vehicle. Whether new or used, it's important that you approach this purchase with as much information as possible. Luckily, that information is readily available on the internet through many varied sources. Today we're visiting Don Chalmers Ford, one of the nation's leading Ford dealers. We're fortunate that the Chief Financial Officer for Don Chalmers has agreed to join us and share his expertise in vehicle buying. Pay close attention, since if you don't, it might cost you hundreds or even thousands of dollars. Please welcome Mr. Kirk Meyer.
Hi, Skip.
How are you, sir?
I'm great. How are you?
Good to see you.
Thanks.
You know, let's just start with the first basic question. When a person decides to buy a vehicle, I suppose that's just simple enough, and I suppose picking out a vehicle is the first step, right?
Well, I don't think so. I think the first thing you need to do is think about your budget and how much money you have to spend for a vehicle.
A budget?
A budget. You need to think about how much money you make, what are you going to spend, or, how much your cell phone bill is, how much you think you're going to spend on gas, what do you think insurance is going to be, your rent, your food. You need to take all that into consideration, because if you don't know how much you have available when you go into the dealership, you don't really know how much car you can buy.
So you're suggesting then that the first step before I even think about buying a car is figuring out what can I afford? Are you talking about monthly payment wise, or the whole thing? What do you mean by that?
Well, it can be monthly payment, it can be the whole thing, because I think they go hand in hand. You negotiate the big, what's the price, and then you're going to find out what your payment is. And if the payment does not drop down into a range that you need, you either need to reduce the price or look at some other variable to get that changed.
Now, you also said that there are other expenses besides the monthly payment associated with buying this car. I think you mentioned insurance and gas. What else is associated with this?
Well, I think insurance is one of the big things, and I think one of the things you need to do is when you get an idea of what kind of vehicle you want, do I want a sports car, do I want a truck, you can call your insurance agent and say, give me kind of an idea what my insurance is going to be. Because I think a lot of people fail to consider what their insurance is going to do to their monthly budget.
You're probably right. I've heard some of my friends complain that insurance is actually bigger in some cases on this vehicle than the monthly payment is.
It could be.
Which I find hard to believe, but I suppose that's just possible. So you're saying that you can actually call your agent in advance and get at least a ballpark quote of what the insurance premium might be?
As far as I know, that's what I do with my brother. He's my insurance agent, and I call him every time I get ready to buy a car, or somebody else in my family gets ready to buy a car, just so we have an idea what it's going to do to our premium.
Makes absolute sense to me. Now, so at this point, once we've gone over the budget and we're ready to now walk into a dealership, right?
Well, I don't think so. I think now we need to do a little research. We can go to the internet. We can say, okay, I want to go buy a new Ford, or I want to go buy a new Chevy. There's lots of websites out there that allows you to do a lot of research to find out what options are available on the car, to find out kind of what the price should be on the car.
You mean you can actually go to a website that tells me what the dealer paid for that vehicle?
Sure.
Really?
Yeah, Consumer Reports has that. There's another website out there called TrueCar.com.
TrueCar.com?
TrueCar.com.
All one word?
All one word.
Okay.
KBB, Kelley Blue Book.
Right.
Matter of fact, I went on there this morning just to make sure I knew how to do it. They'll give you a range on a new car. Edmunds, Auto Trader, all those websites give you what the dealer paid for the car. They tell you what incentives that are out there on the car. They load you with information so you can come in and make an informed buying decision.
So it might make sense to go to all of those sites so that you get a full picture of what the dealer's cost is on this particular automobile you want to buy.
Correct. And they also tell you the range for probably the last 30 days of what that particular vehicle has been selling for.
Oh, really?
Yeah, which is really neat, because I think the main thing that people want is they want confirmation from an outside source that they're getting a reasonable deal.
That's it. You know, and speaking for myself, when I walk into a dealership, my main objective is to pay as little as I can for the automobile. Now, I understand that, especially in a new car area, that the margins are rather tight on that from a dealer standpoint, and you got some people that have to make a living selling these cars.
That's right.
And those people, of course, are the salesperson and the clerks and the cashiers and the finance guys. Everybody has to make a living here.
That's right, and the owner has to make a return on his investment, or else he's not going to invest in a car dealership.
That makes sense.
So everybody's got to make a little. So you have to decide what's a reasonable profit. And these outside sources kind of tell you, here's kind of where vehicles are selling in your area. And you got to remember, the brand new Mustang, like the Mustang sitting behind me, there's a limited number of those. You're not going to get as good a deal as you are with the new Focus, where we have 10 of those on the lot versus only 1.
Right. By the way, it's a great looking vehicle. My gosh, I can see myself in that.
Me too.
I didn't bring my checkbook though, so I guess we're just going to have to wait till a different day. All right. So is this true with used cars as well? That I can get this price range and what people are actually paying for this type of vehicle with this many miles on it, etc.?
It is true, and I can tell you, on our website we subscribe to a service called The Real Deal, which is done by vAuto. They go out and they'll tell you, we can put in a particular used car, and we can put in all the specifics of that car, and then we can give it a parameter, and say within 50 miles, 250 miles, 500 miles, and it'll come back and tell us how many of those vehicles in that color are in this area, and it tells us what the average price is, tells us what the high price is, what the low price is, tells us what the miles are on the vehicles. So you can do a lot of, and you can get that, you can go, not even on our website, you can just go to The Real Deal, and so you can look up various vehicles.
Now, for used vehicles, I'm sure you would recommend that, especially if I'm buying from a private owner and not a dealer, that I should have that vehicle inspected.
Sure.
Does your dealership do that for folks, or?
We can do a vehicle inspection for you. You can get Carfax. You can go out and order that yourself, and that'll tell you if there's been any major damage that's been reported. It'll tell you if there's been any title issues that it's aware of, and kind of gives you a brief history.
A lot of times with a private owner, you don't know whether the car's been in a flood maybe or something like that. Would a vehicle inspection show that? Would a Carfax show that?
It could. It could. You know, one of the things about buying from a dealership, one of the differences is you get some warranty when you buy from the dealership versus when you buy from an individual.
Okay, so.
But that's thinking about taking that a step farther.
Right.
When you go to trade in your vehicle, which is something else you should do research on.
Ah, really?
Yes. Those websites will let you go in and you can put in your current vehicle, put in all the options that it has, and then it's going to go through and ask you to rate what type of shape your vehicle is in.
Well, mine's in great shape.
Yeah, everybody thinks it's in excellent shape.
Right.
But for the most part, 90% of all vehicles are in good shape. So good shape, and then it's going to give you an estimated value for a trade-in, and it's going to give you an estimated value for a private party sale. The two numbers are different. The trade-in value is lower.
Right.
One, for convenience, but two, the dealer's then they're going to have to put a warranty on that vehicle when they sell it. They're going to have to do reconditioning, which means getting the oil changed, making sure the tires are good, fixing any chips in the glass, stuff like that.
And they still have to make a profit.
And they still have to make a profit when they sell the vehicle.
So you got to be, what I'm hearing you say then is that you've got to be realistic in your approach on your trade-in. You got to look at these numbers and say, okay, my car's in good condition, and this trade-in value is where I'm going to start.
Yeah, and I mean, you just need to be honest with yourself. Walk around the car and go, oh, I see a little chip. Well, that takes you from excellent into that good range. But then if you look at your car and you have a big dent on the side, or there's a big scrape, well, maybe it's not good anymore. Maybe it drops down to fair.
There's issues with smoking in cars and that type of thing too, right? If your car smells like a cigarette pack, you got a problem.
If your car has been smoked in and there's any odor at all, you need to note that, because that changes the value of your trade-in.
Yeah, I can imagine it does. Okay, now we're ready to walk into a dealer.
Now you're ready to walk into the dealer, except for one more piece of research you need to do.
Okay.
You need to go out and you need to take a look at your credit. You need to know what your credit is before you walk into the dealership to buy.
Really?
Yeah.
Well, won't the dealer tell me that?
Well, the dealer will tell me, but not all dealers are going to tell you exactly what you want to hear. Most will. You need to know for yourself. You should have independent confirmation. You should know, because that gives you can then negotiate from a position of strength.
So if my credit score is really good versus a bad credit score, what does that mean in terms of me buying a vehicle?
Well, that means you're probably going to be able to get a lower interest rate.
If my score's good.
If my score's good, with that lower interest rate, then I can maybe afford a little more car because my payments won't be as high.
So that makes sense. I guess I can go to annualcreditreport.com, get a copy of my credit report, but I don't get the score there. How do I get my score?
Experian, some of the other credit TransUnion, you can go to different websites. They'll give you your actual score.
Right, and there's a fee for that. I think it's $5.95 or something like that, but you're suggesting that would be a pretty good investment.
I think it'd be a great investment.
Makes sense to me. All right, so we've done the credit score, we've done all our research. Now we're ready to walk into the dealership.
Now you're ready to walk into the dealership.
Okay, now I've heard that there are some things that people say that they shouldn't say when they first walk into a dealership. For example, I walk over to a car and I've got a salesman with me and I say, I love this car. Or maybe a statement like, I really need this vehicle. Does that set me up?
It could. Part of it, though, I think, is your own mentality. You have to not fall in love with a vehicle. I mean, as much as I would love for you to fall in love with a vehicle, because if you do, you're probably going to pay more for that vehicle because you want that vehicle more. You need to look at it as a commodity and go, well, there's this one, there's this one, there's this one. I can take any one of those three that'll meet my needs, and when you negotiate, you have to remember that.
Yeah, it's probably an error to fall in love with any inanimate object that is going to depreciate in value, because let's be realistic as well. Whatever I pay for an automobile, when I drive it off the lot, it drops in value pretty quickly, doesn't it?
That's true, it does.
Well, why is that?
Depreciation. It becomes if it's a new vehicle, as soon as you drive it off the lot, it now becomes a used vehicle. So it no longer has the new stigma.
Right.
And then used vehicles, once it changes title, the more times it changes title, the value starts going down.
Well, I suppose that just makes sense. So, but there are some vehicles, if you keep them long enough, that trend actually goes back the other way.
That's right, they start to go up in value.
Because I look at that Mustang behind you and I'm thinking, that's a beautiful car. I wonder what that car's going to be worth in 30 years. It's probably going to be worth twice what you're selling it for.
Especially if it's been parked in the garage and driven only on Sundays to church, and nobody moves you don't drive it too much.
Don't you wish you had a 1964 Shelby right now?
Oh, it would be great.
Wouldn't that be terrific? Well, speaking of that, a lot of people walk into the dealership with expectations that are way beyond what they can afford. Perhaps they haven't done their research, perhaps they haven't. What kind of realistic expectations should one have relative to their driving habits, price of gasoline, etc., when they walk into a dealership?
Well, they need to think about what the vehicle is going to be used for. If I if I go to the dump once a year, do I really need a full-size pickup to drive around all the time?
Not if I figure out what that mileage is going to be for me. Yeah,
that's right. Maybe I live on one out here in Rio Rancho and I work all the way at the airport. I need some type of vehicle that's going to get good gas mileage, especially in a commuting environment. So I need to think about that when I buy my vehicle.
Makes sense. Now, a lot of times when I've walked into a dealership, the salesman has asked me just one question. What kind of monthly payment are you looking for? And I have an idea of what that's going to be. But should that be my focus, or should it be on the full price of the vehicle?
Well, I think they both go hand in hand. I think the full price, but you're always in the back of your mind, so even with the full price, if I'm going to finance part of it, I need to know what the monthly payment's going to be. So I think that goes hand in hand. Start off negotiating with the full price, and if you read all the magazines and if you go do your research, they always say you should negotiate up from what the dealer paid for the vehicle. You don't want to negotiate down from the sticker price. You want to negotiate up from what we paid.
Right.
And so you want to get to a price, and then once you get to the price, then you need to look at what the financing option is.
And that's going to be a function of my credit score and the interest rate that I'm going to pay and the financing that's available, correct?
Right, and then you're going to get a value, or you're going to get a monthly payment, and if that monthly payment is either too high or too low, then you can either go to I want more vehicle,
right,
or I need to negotiate a little bit harder, or gee, I need to change vehicles.
Now there's something else that a consumer can do as well to make that monthly payment fluctuate, and that has to do with the down payment, correct?
Correct. The more money you pay up front, the less money you're going to finance.
Right, so your suggestion would be, and you and I have talked about this before, there are length of term loans out there that go as many as 72 months, I understand.
Yes.
That's probably not the wisest thing to do, is it?
Well, it probably not, but it depends on the person. If you're a person that buys and will drive the car for 10 years, a 72-month loan is probably okay for you.
Okay.
But if you're not a person that does that, if you get tired of things after 2 or 3 years, you want to go for a shorter period.
Right, and also there's a term called upside down in the deal, and that really means you owe more on your vehicle than the vehicle is worth. And if you got a 72-month loan, that's probably going to be the case pretty much the entire time of that loan, isn't it?
I think we looked at it previously, and I think it was out in the 3.5 to 4 year period is when the equity in your vehicle was more than what you owed.
I got you. Well, it makes sense. One last question, and this comes back to financing as well. Dealer financing, bank financing, would it make more sense for me to walk into the dealership with a deal already in my pocket from a financing point of view? In other words, I can go to my credit union or my bank and arrange the loan first, and then maybe I can shop your financing deal and see whether it's better?
Sure, you could do that. That's just doing your legwork, your research in advance. So you know, but there are times dealers can get incentive rates. I mean, Ford Credit, their whole business is providing credit to people buying Fords.
Right.
So at times they're going to offer special rates that banks aren't going to get as low as.
But go ahead.
But if you have a rate in your back pocket, then you know. Then if somebody says, "Well, I can get you X rate," well, but that's higher than what I've already got. Oh, well then for me to be able to get it, I need to be lower than that, so that's going to help you.
Makes sense. I lied. There is one more question I got to ask you. Is it better to buy at the first of the month or the end of the month? I've heard that if I buy at the end of the month, I get a better deal. True or not true?
It depends. It depends because all salesmen at almost every dealership are commission-based, so they make money on what they sell. They also normally have incentives for the number of units. You know, if you're commission-based, the first one's every bit as important as the last one, but the last one, you might push a little bit harder if it's going to push you over from one rate to another rate. So it all depends.
On the salesperson and the month.
And the month, what's going on in the economy, it all depends.
Kirk, thank you so much. Great information. We always appreciate having you on Focus on the Future. Thank you, sir.
Bye.
Hey, Em, you look great in this car. Do you like it?
This car is great. I really, really want to have this car.
You really want it, or do you really need it?
Well, I really want it. I don't really need it, but it's a very cool car.
Well, you know, did you learn anything by that interview we just did?
I did. And so it's kind of hard to be in this really great car. But you know what? Kirk was absolutely right. And you have to start with a budget. You have to know how much car you can afford, really afford, what kind of car you really need, not really want,
right?
How much gas is going to be, how much insurance is going to be. There's a lot of things to figure out. So it starts way before you walk into the car dealership.
You know, I thought that was really revolutionary because a lot of folks don't do that. They think, well, I need a car, And the first thing they do is run down and start looking at cars.
Right.
And that's not the first step.
It's not the first step. And Kirk said that young people should arm themselves with all of this knowledge that can be found on the internet. And you really can be in a position of power. Young people think because they're young that nobody's going to take them seriously, but they can do this. And you know what? If you walk into the dealership with all that information, you're going to get a way better deal.
You know, you're right, and you're going to walk out with a good feeling because you know that you didn't pay too much for the car based on your research.
That's right. There's a lot to know about this, and you don't have to know everything, but you do need to know what you can afford, what kind of car you want. Don't let some salesman push you into a vehicle. What kind of car do you want, and what kind of car can you afford?
You know, something that just came to my mind is that we talk about financial relationships and building those financial relationships. You can actually do that with a car dealer if you've done your research first and you establish a long-term relationship knowing that you're getting a fair deal.
I think so, knowing how much you actually have in your pocket to spend total for the vehicle and how much you're going to pay for it every month if you have to finance it.
So what's up next?
Up next, we have Budget Busters to be followed by the Stock Market Corner. Stay with us, guys. Hi, welcome back. Whether you realize it or not, the credit card game has changed. Here, along with the past show on credit, you decide if this change is a good thing or a bad thing. It used to be that credit card companies would give you everything from sodas to free t-shirts to get you to sign up for an account. These companies were everywhere, from concerts to college campuses. Well, not anymore. First, if you're under 21 years old and still claimed as a dependent on your parents' taxes, you'll have to get their signature as a co-signer on the credit card account. If you're over 21 and a college student, you'll be able to get a card with a $500 limit or 20% of your verifiable gross income, whichever one is greater. While this sounds like a huge bummer, keep in mind that college students have been graduating with between $5,000 and $10,000 in credit card debt. And that's only credit card debt. I'm not talking here about student loans. That's a serious amount of money. So, if your parents think that you're responsible enough, they agree to be a co-signer on your credit card. And that means that if you can't make the monthly payment, then they're responsible to make it for you. Well, that's good for you, right? But bad for your parents. Please remember how this works in the event that a friend or a boyfriend or a girlfriend ever wants you to co-sign for them. It's a real big deal. You're making a legal promise here. No doubt you've heard what we've talked about here on the Focus Show or overheard the news or people talking about the economy. Many people think that one major problem has been the overuse and the overabuse of credit. But I'm confident that you will not be part of one of those many discouraging statistics. So this is what you do. First, when you choose a credit card, filling out the credit card application, read the Schumer box. That's the insert that's required to be in every single one of those offers and explains the detail of the agreements in the event that you sign up. This insert will explain the interest rate on unpaid balances, the amount that you'll have to pay if your payment is late, or if you exceed the credit limit and other charges that may apply. Remember that you're about to sign a legally binding contract, so read all of the details and the fine print very carefully. Second, when you charge something, write it down, just like a debit card purchase. You could also write a note on the receipt or keep a list in your phone if that's easier. By doing this, you won't be shocked and surprised when you get the statement at the end of the month and can't remember what the heck you bought at that one store. Plus, this will help you keep from busting your budget when you conveniently pull out that plastic at the store. And third, pay the bill in full every single month, no exceptions. Nobody likes having debt hanging over their head, especially when you can't remember what you purchased. So take a minute to do the math. And if your credit card has an annual interest rate of 21%, you probably wouldn't have spent that money on the stuff. Credit cards are not a good place to borrow money. That's what a bank or a credit union is for. They'll give you a better interest rate. Before you think about using your credit, always ask yourself, do I need this or do I just want this? I know that emergencies happen and you'll certainly be glad you have that credit card if there's an unexpected expense. But pay it off as soon as you can if that happens, and don't use the credit card for other expenses until you've paid off the debt. See you soon.
Hi, and welcome to the Stock Market Corner. I'm Tom Crow.
And I'm Emily New. How's it going today, Tom?
Very well. How are you?
I'm doing good, and I heard that the market is up, so that's great news.
Market is up. It's nice. We just broke above break even for the year, which is nice.
That break even means what exactly?
From where we started the year, if you look back at the chart for the whole year, we had a nice little run up into summer and then a crash, and now we're back to just above where we were at the January 1st.
So we're not really above, but we're not below.
No,
so
we're right about break even,
okay.
which is better than losing.
Better than losing, yeah, I think so. Well, what's going on with the markets? What's driving them? What's the news?
I think primarily still the focus is on Europe, which is a little, we talked a little bit about this last week, that it'd be nice if we could focus on what's going on in this country and not so much about what's going on over there. The European Union's having a big meeting this weekend to try and figure out all the debt issues with Greece and all the bailouts and how much money they're going to loan, what kind of shape they're in. And everybody seems to be focusing on that. On this side of the pond, what's nice is that we are in earnings season, which started October 1st, which was the end of the third quarter. Companies start reporting what they made for the quarter.
Okay.
And we had about 25%, maybe 20 to 25% of the companies in the S&P have reported earnings, and about 75% of them are above expectations.
So that's good.
So that's very nice. That's a strong indicator that our economy is doing probably a little bit better than some of the pessimists would like to think.
But does that mean that the 75% still need to report?
Yes.
And do they have like a certain time period when they have to report? Or
it's up to them. It's usually done within about the end of October. We'll start to see it taper off. But pretty much that whole month, the first month of the quarter, will be full of companies from the third quarter reporting.
So I would assume that the sooner they get that news out, it could help their stock prices, right? So
if they do well.
Yeah. So hopefully they'll be getting that out soon. Well, do we have any of them to talk about specifically in our portfolio?
Well, we talked, not in our portfolio to really talk about. We did talk about Apple last week, and we talked about the death of Steve Jobs and how that would impact the stock price. That didn't have nearly as much of an effect on the stock price as their earnings report did. They came in under expectations, and they said that the sales of the new iPhone were less than expected, and that definitely hurt the stock price. They're down about 5%. They've slipped back under that $400 a share mark.
Well, it's kind of funny because I speculated, and granted, I'm not the financial advisor that you are, and I don't have your training, but I kind of speculated that with the loss of Steve Jobs, so many people equated him to the brand of Apple, and you know his being the innovator and everything, that their stock would probably go down a little bit, but we didn't really see that. And everybody was expecting this new iPhone to be so great, but that's kind of what's...
That's the one that's driving the thing. Yeah, because it's a short-term, that's still an indication this is still a short-term trader's market, that people are reacting to the immediate news, what happened last quarter, versus the legacy that Steve left the company, which is still 4 or 5 years out. I think he even had plans for the iPad 4, you know, iPhone 10. They were all out there, and he was already, you know, he already had sketches. I guess somebody said this morning, the next big thing he wanted to do was actually design and build the car that runs on no gas.
Wow.
And if anybody could do it, it's probably
Holy
Steve Jobs.
cow.
But we won't get to see him do that. But that was his next big thing.
Yeah, that's a lot.
He was a dreamer
of stuff.
and a visionary.
Well, good for him, and obviously most of us love those products, so that's really neat. And, well, it'll be interesting to see what happens with Apple as, you know, they kind of deviate, and maybe people will be buying iPhones for Christmas.
I think so.
Who knows?
I think probably the technology and the retail sales are worth hanging on to through the Christmas season to see, because I think, like I said, we have good earnings reports on average. We also had, for the first time last month, the leading economic indicators ticked up just a little bit. We're positive for the first time in several months, which is also a good indicator that for the next few months we might see a little bit stronger economy than we thought we had.
Well, hopefully, and I know that you've mentioned in previous segments that this is kind of a weird period too, with us going into an election year, and we've got that uncertainty still in Europe, and so it's just going to be kind of interesting how this all plays out. And yeah, nobody knows the future, and we're all kind of speculating. So hopefully we get something a little bit more even that we can talk about. You mentioned a day trader's market. Now, what does that mean, and how do you classify it being a day trading market?
It's indicated by the amount of volatility. We're still seeing the S&P kind of trapped in a range. You're seeing individual stocks with big swings in them. We're seeing triple-digit moves day after day in the market, up and down, which indicates there's a lot of short-term speculation. A lot of people are buying and selling either during the day or holding only 1 or 2 days, trying to make a quick profit versus a calmer, more regular, predictable market that you can buy and stay into for quite a while.
Now, why do they do that? Because they think that the market's going to change so much that they have to do these trades so quickly?
That they're looking at the uncertainty, being a week out and not knowing what's going to happen in the world. You know, we've got the markets are going to close this afternoon, and then they're going to have a big meeting in Europe.
Right.
So, you know, and who knows what will happen surrounding that meeting. So people, at least the traders, don't want to be in the market over the weekend when some piece of bad news could likely ruin them come Monday morning.
But it seems to me that if you're just in for that day and hoping that the next day the price is up or down, there's a little bit more uncertainty on a daily basis.
Sure.
To me, because if one thing comes out or one analyst says something, and who are these analysts, by the way, that are making these decisions and these predictions that affect stock prices?
There's probably as many analysts as there are stocks out there, and they
Because
all work for companies. We refer to the analysts and their expectations. Like we said, Apple missed earnings. So Apple has a number they think they can meet for the quarter. The analysts look at their statements and look at the economy and the overall market. They decide what they think Apple should make. And then Apple comes out with the real number at the end of the quarter, which either is above or below their expectations, the analyst and the companies, and then the traders and investors react accordingly.
Huh. That's interesting. There's an awful lot of power out there that somebody's making those predictions.
And you have to look at who the big heavyweight analysts work for. They work for the investment banks.
Oh.
And so that means, well, I shouldn't name names, but some of the big companies that own a lot of stock, whose brokers buy and sell stock for them, and their analysts are making recommendations. So there's been some call that there's a little conflict of interest out there.
Yeah.
There's a rule that I can mention called the Merrill Lynch rule, which says that brokers don't necessarily have to act in their client's best interest. They can do what the company tells them to do. So if Merrill's saying it's time to sell Dell Computer or Apple, then Merrill's brokers are trying to sell that to their clients.
Interesting. There's so much stuff about all this that I have no idea about. That's
a lot of moving parts. And investing, as with the economy, you don't have to know everything, but you probably need to know at least a little bit about a few things, so you can listen for keywords when you're hearing economic reporting, so you know what to do.
Makes sense. Well, I'm glad that I'm not a day trader. That's a little too much stress for me.
I'm not either.
Hoping that it goes up or down. I don't know. That kind of freaks me out. I'm thinking long-term, systematic investing makes sense to me. But anyways, well, let's talk about the companies that you picked for our virtual portfolio.
The companies in the stock market, Corner's portfolio.
Yeah.
Abercrombie & Fitch was doing quite well until today. And for some reason, some of the bears decided to jump on and start beating them up. So they've been under a little bit of selling pressure. As of just about a half hour ago, we were down about 1.5% in that one.
Okay, not too bad.
Atmel, our little semiconductor company, is doing well. We're up about 3.5% in them.
Good.
Bed Bath & Beyond, we're a little above break even, about 0.5% positive. Kohl's is doing very well. We're up 7.5% in that one in just a few days, which is a really nice move. And the high-risk one, the SID, the Brazilian company, we're down about 7.5% in that one. It closed last night right at our 10% mark. We talked about our volatility being above 25. We're still at about 32, which is more indication that it's a short-term trader's market. People are driving prices around like crazy. I'm going to make a judgment call on that one. We opened up strong this morning, made back about 3% already, so we're not going to sell that one just yet.
Well, now you mentioned Brazil, and they're not a company based out of the U.S. I'm just curious, do markets in other countries, do they react or affect the news that is happening like overseas in Europe? For example, is what's happening in Europe affecting what's happening in South America? And is there that same kind of synergy?
It will. As we talked about Libya, the situation there, that is likely to have a big impact on the price of oil, depending on who retains power, how they participate in OPEC from this point forward, what it's going to do to oil prices. Brazil and India are the two economies that are most heavily impacted by our economy. Those are the economies into which we outsource the most.
Okay.
So when the U.S. is doing well, or the U.S. is a little bit stronger, they tend to do very well.
So there's like a ripple effect between us and them.
It's the ripples in the pond, exactly. Now, the countries they outsource into, which are really third world countries, you'll see go exponential, but most of them don't even have organized markets, so you really can't trade those.
Well, it's just so interesting to think how globally connected we all are, and how what we do affects them and what they do affects us. And
well, that's something important to keep in mind, that the U.S. economy is not a closed system. The world economy is.
Right.
So the U.S. can have pluses and minuses. The overall global economic picture, what we're seeing now is this massive deleveraging. The whole thing's contracting a little bit, but there's still within that countries that are showing strength and weakness as they interact with each other.
Makes sense. Well, I noticed that gas went down a little bit, and maybe that is connected
That's
somehow
always nice.
to the death of Gaddafi in Libya. Who knows? Because I'm not sure. I don't know how much oil they're actually exporting and if that's going to make a difference. But I like the gas being a little cheaper.
That's always good.
All right. Well, that's it for this edition of the Stock Market Corner. We'll see you guys next week.
See ya.
And now here are this week's questions for classroom discussion. Number 1. What is the first thing you need to think about when you go to buy a car? Secondly, if you are under 21 years old and can still be claimed as a dependent, what do you need to open a credit card account? And finally, what is a day trader's market and what does it mean?